1 through 4. I'll find out from the other group whether we are doing a review today. And if we do one with anybody, if a few people want to come, I'll put it up there. If you want to watch it. If not, if we don't do one, we don't do one. Yeah. Okay, anyway, so which problems? I bet you got the first few, right? Liabilities are on the right-hand side of the accounting square equation, of course. Your credit, the debit. Unearned revenue is a what? Liability. So guess what? The liability increases the credit. Debit means left. Credit means right. Accumulated depreciation is a what? Contrast that. So of course it's increased to the credit, reduced to the debit. Right? So if you know all that stuff. How about discounts on bonds payable? Discount to liability, increase to the debit. Right? Increase to the credit. Right? Okay. So what about treasury stock? Equity, therefore, right-hand side, increased with a debit, reduced with a credit. How about common stock? It's an equity, increased with credit, reduced with a debit. These should all be, I can pick any account, right? Any account, asset, liability, equity, revenue, expense, so, right? And I'll give you some, probably a couple, okay? We learned it in this class. Okay, so 5 through 7, what do you do with that thing? These are going to look really simple now compared to what happens on the second test even, right? And certainly what we're doing by the end. This is just nothing, right? How would you set it up? I think I'd get organized. I'd have an income, or a balance sheet rather, and an income statement, wouldn't you? At this point. And when you look back at it, you're going to be like, why didn't I do this? And I showed you how to do it exactly this way. And then a whole bunch of you didn't do it. Crazy, right? Doesn't make any sense. Okay? But you'll be there now. Okay, and so we want to fill it in, but also there's dividends there. Oh, so if there's dividends, then where's that going to go? That's going to hit retained earnings, right? So we probably have contributed capital and retained earnings. And in retained earnings, what happens? I have a beginning, I have an ending, I add my net income or subtract my net loss if there's a net loss, right guys? It's one or the other. And I have my dividends come out. That's it. That's the world, right? Okay, and then contributed capital would be the rest of the equity, wouldn't it? Okay? And we increase contributed capital with the credit, reduce it with the debit too, because those are both equity accounts, right? Stuff you just know, okay? All right, anyway, so it says revenue is $240,000. So I put a 240 there, wouldn't you? I don't know dividends, I don't know liabilities, assets are 250. Let's see, equity is 160, and that's total, right? What's liabilities, you guys? It's only 90. We know, right? We know that. Okay? What's contributed capital plus retained earnings add up to? 160. It's equity, right? That's it. Okay? Net income is 65. Can you tell me what expense must be? Well, this is a credit, and that's a credit. What's the debit for expense? The difference? How much is that? 175. Okay, so we got one of the answers, don't we? I thought I'd ask for that. Okay? What else do we need? We need the dividends, right? So we know net income goes up by 65, true? Okay? So what else do we have? At the beginning it says what? Dividends contributed 100. So they started with nothing, they contributed 100, they have 100 at the end, don't they? Now I can do what? Ending retained earnings, how much is that? Of course. 100 plus some number is 160, right everybody? 60? And they just started this year, so guess what the beginning is? Nothing. So you added 65, you took away the dividends, you ended up with 60. What's the dividends, everybody? 5. Oh man, this is unbelievably easy. Okay, so I guess number 5 was the 5,000 dividends. Whoops, not net loss. Dividends, okay. Dividends of 5, right? And 6 was, what's the liabilities? It's 90. And 7 is, what was the expenses? And that's the 175. So, did you get all these right? Yeah, some did. Some of you did not get them right. Will you ever miss something this easy again? Nope. Will people who aren't here today and are doing 400-point finals miss them? Yes. Not this week. They don't show up. But you have a basketball game and the other team forfeits. What a deal. Yeah. We're going to have a real low GPA in here, guys. I'm getting all kinds of A's and B's. Get one of those A's. Why not? There, you get the jobs. It works. Why not? You don't have to have A's to get jobs. You have B's to get jobs. You have C pluses. You can't have D's and F's. It won't hire you. It won't hire you. Why go to college and spend all this money to get D's and F's? I don't know. I guess mom and dad are independently wealthy. The kids are independently wealthy. I guess. Right? Life is one. You can do it whenever they want. Okay, 8 to 11. The sale of inventory that cost $18,000 to customers was sold. The sale of inventory that cost $18,000 to customers for $10,000 cash and $30,000 in account. Okay, and what does it do to all those accounts? Oh, well, what I want to know is what happened to the balance sheet and the income statement. Right? That's all it's asking for. Okay, I want to know what's the impact on these things, don't I? Okay, assets, liabilities, equity, expense. What's the journal entry? If you know the journal entry, you know the impact, don't you? Because you are creating the financial statements when you make journal entries, aren't you? Right? What's the journal entry? Debit cash, 10,000. Fantastic. What else? Accounts receivable, also a debit, another asset. How much? 30? Was it sold for 40? Yeah. Okay, what else do you want to do? Credit inventory for 18? I'll buy that. What else do you want to do? It's a sale, you guys. Sales revenue. How much? Not the difference. A whole bunch of you did that, but that's not what it is. This isn't a gain or loss of selling a building or something or a piece of equipment. What is this thing? It's sales revenue for you. Then what's the 18? Cost of goods sold, which is a what? Expense. Aren't you glad you're here today? Well, a bunch of you guys missed this stuff. Why? You know what cost of goods sold is. You know what sales is, right? Just let yourself relax and think when you do the final, and it's just going to fall in place. Boom, 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 right? I got that, got that, got that, got that. I'm going to give you 3 hours to do about 2 hours worth of tests. Okay? It's going to be really nice. Right? But work quickly so you have time at the end to go back and do the things you weren't good at or whatever. You know, it could take a little more time. All right. Anyway, so what do we do here? Well, how many of these are assets? Those 3. What happened to assets? Let's see. I increased it 10. I increased it 40, and then I reduced it by 18. What happened to assets, you guys? It increased by 22, just like that. Okay? What happened to liabilities here? Did anybody see a liability in those journal entries? Nope, nothing. What must be the case with equity then? Must go up by 22, just like that. Okay? So what must be the effect on net income, seeing as there's no contributed capital there or dividends? What do you think? Net income must be what? 22? How did that happen? What's your revenues? There's only one. It's 40. That's a credit. This is a credit. Guess what the expense must have been? 18. That's the only expense, isn't it? Wow. And now I'll look at this, 8 through 11. What happened to assets? I think they increased. On a final, I'd probably ask you how much, right? They increased, okay? What happened to liabilities? Nothing, no effect. What happened to equity? It increased by the same amount the assets increased by. What happened to expenses? It increased, right? Okay, from this transaction. Got it? Easy? Yeah, not bad at all. Okay, number 12, I guess. What is it? Which correctly describes retained earnings? What happens at retained earnings? Start the company with nothing in it. I add the net incomes. Every year I've been in business that I had a net income. I take out the net losses. Every year I'm in business that I have a net loss. So there's a lot more of these. Okay? And I take out the dividends. Every year I paid a dividend. And what do I get at the end? The ending balance in retained earnings. Which one tells us that? Is the cumulative net income of the company? No, that doesn't include losses and dividends. It represents the investments by stockholders? No, it's not. That's contributed capital. It equals total assets minus total liabilities? No, that's total equity, isn't it? It is the cumulative net income of the company less dividend declarations. That sounds pretty good to me. It's D. Okay? Which of the following would not be currently reported as expense? How about prepaid? Huh? What is that? Asset, current or non-current? Almost always current. Do you pay your prepaids more than a year in advance? You might. Some could be non-current, some could be current, right? Okay, but usually just 1 year or less than a year, months maybe. Okay, good. So prepaid. All the rest of those are expenses. And the trick was, look at that. Prepaid insurance expense has the word expense in it, and cost of goods sold doesn't, right? So you need to know cost of goods sold is really an expense, of course, right? So, which of the following direct effects on the accounting equation isn't possible as a result of a single business transaction? This one's hard. I think what I'd do with something like this is I'd try to write down an example, a journal entry for it. On the first one, an increase in a liability and a decrease in an asset. So let's see, let's increase a liability. What would be an increase in a liability? Any liability. How would you increase it? With a accounts payable. With a what? Credit. Accounts payable. Has to be a credit, right? So the other entry's got to be a debit, doesn't it? Oh, it's decrease in asset. Cash. How do you decrease it? With a credit. Is it possible to have two journal entries or two credits and no debit? Nope, that's the answer. This was hard only because it was unfamiliar. It's not really hard to try to write down a journal entry. That's impossible, isn't it? Okay? An increase in a stockholder's equity and an increase in an asset. Give me an example of that. What if I asked you for an example of one of those? What happened? Increase in equity and increase in an asset. Owners contribute cash, right? Debit cash. Credit common stock. Right, guys? And maybe additional paid capital. So sure. An increase in an asset and a decrease in an asset.
Cash for inventory.
Yeah. Debit inventory. Credit cash. This is easy, isn't it? Right? Now you know what you're doing. Everything gets easy when you know what you're doing. Okay? A decrease in stockholders' equity and a decrease in an asset. Got one on that? Treasury stock. Buy treasury stock. There's one. Debit treasury stock and credit cash. Got another one, anybody? How else would you reduce equity? Now, like giving some of it to the owners? Dividends. Debit retained earnings or dividends, which is a temporary equity account, right, if you want to use it. Okay, and credit cash or, right, cash asset. Yeah. Easy. So the answer to that one, say, guys look excited. These are easy, aren't they? 1/3 of your exam, right? Coming off of these 4 chapters. You like that? Or whatever, 5 chapters. About a fourth of it, I guess. 4 chapters. It's 4 14ths. Yeah, okay. That's a third, isn't it? That's more. Yeah. Almost more. A little less. Whatever it is. Okay, anyway, so then this one, you look at it, at the time you look at it and say, oh my gosh, what do I do with this? But it's really not a very big deal. I think what I'd do if I were you is I would, with a problem like this, I'd put initials next to each one for what they are, and then I'd start answering the question. Because it wants current liabilities and current assets. Well, I'm going to go find the current liabilities and current assets. If it wanted non-current assets, that'd be fine. If it wanted non-current liabilities, that'd be fine. If it wanted equity, that'd be fine. So let's change the problem. I want you guys to do this. I want you to give me the current assets, give me the current liabilities, give me the non-current assets, give me the in fact, let's do it like this. Change it a little bit. But if I wanted all that stuff, this might be a good way to go. Why not do it all together, like this? Current assets plus non-current assets equals what? Total assets? You guys agree with that? And then current liabilities plus non-current liabilities equals total liabilities. True? And then if we add those two together, what are we going to get? Total, whoops, I'm having trouble all of a sudden. Okay, come on. Put the equal there, okay? Total assets equals total liabilities plus what? Total equity, right guys? What's the equity consist of? Contributed capital and retained earnings. Give me all those. Get current assets, non-current assets, and that'll give you the total. Get current liabilities, non-current liabilities, that'll give you the total. Get contributed capital, retained earnings, and that'll give you the total. So imagine the types of questions that I could do here, right? So you're going to get totals for all those. Everybody good? And, you know what a balance sheet would look like. Go. Spring's always interesting. 101. Sometimes you lose one or two people. They're all like you guys. Serious. So what I do is I take that sheet of paper and I go down and I write next to it. Cash is a current asset with CA next to it. Short-term investments is a current asset with CA next to it. And keep going down the list. Identify what things are. Current asset, non-current asset. They're even in order. I won't put them in order, right? Maybe I'll put them in alphabetical order like that. You have to identify them. Here it's real easy, but this was our first test. Go down and grab them, add them up, make sure your balance sheet balances. I don't know if it does in this problem. I sure hope so. Here's the problem. I stole that from some test things. Everybody got it? Yes? You're getting there? Close? Let me finish. Getting there. You guys are the machines. Not really. Analytical monsters. If I'd have known how good this speaker was going to be last night, I would have coerced you guys into doing it. She was financial vice president for Brown-Forman for 7 years. She was financial vice president, chief financial officer for Arco, which was a big oil company. You guys remember Arco? Again, out on the West Coast. She was with them for 24 years. Became their CFO too. She was CFO for Motorola, in between, for a division of Motorola. Unbelievable. She's an angel investor. That means she's really rich. She donates, or she invests. She was talking about doing that and about her career and stuff. I'm going to get her to come and visit an auditing class next year. We have to get on her schedule 18 months in advance because she's so busy. She's on the board of directors for Coca-Cola. She was for Oshkosh Clothes, and that's a small company there. It's only 100 million in sales, maybe. Right? It's a little tiny. She really is more comfortable with billions. She's managing something, or with real little. So I mean, next time she's around, we'll get up to where she's. ED. Wood. Well, you were there. I'm sorry. I apologize. That right there. You think it was pretty good?
Oh, I thought it was great.
Yeah, pretty cool.
Yeah, I've been to several of the speakers, and that was
Good man. Yeah, we need to get better attendance at those too. That's what's terrible. Some of those kids that were sitting there were getting credits for it. Were you from the class? You weren't getting credit.
Kind of. But I mean,
You
I
should
would have
write
tried to do it
something
anyways.
to do.
I haven't been able to go to the talks because I usually have attending chemistry labs on Thursdays.
So you get a little, in what class do you get credit for? Business?
Yeah, we've got to do like a writing assignment.
Intro to business or something?
Yeah, she has a weird grading scale where like.
No, that's okay, I don't mind for that class at all. I won't give you extra credit for any kind of class. You should be doing it just because if you want an education. What a great person to know, you shook her hand, you know her now, then. Probably shook her hand twice. Face, face, yeah, a powerful woman, yeah, and so.
Yeah, she's got it figured out.
Who knows? Yeah, who knows what happens later? You know, and what you can do is you can say, you know, I saw you speak. Boom, that's big. Okay. Yeah, I saw you speak when you came to campus. Later, when you have some contact with it, like when you have a business idea and you're trying to get a finance. I saw you 5 years ago speak at Bellum, and I was really impressed. You know, and I'm not just saying that, I really was, honest. Whether you give me money or not, you know, yeah, when you're making your presentation. Because she is impressive. And also a really nice person. So I tried to hit her up for money, and she says, no, 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 no. And I said, no, no, not really, not really. Yeah. But first I hit her up to come visit classes, right? And then I says, oh, by the way, I'm with KCE. I was handing her my card. See there? She says, oh, no. She's on the board for the King's Foundation. And they do give us money. They're generous. So you go get more. Or maybe less because I talked to her. That might be enough. Yeah. It may be. Okay, anyway, what'd you get, guys? Current assets, what do you have? Come on, confident, throw your number out. How much? 9.6. Does that everybody agree? Yeah. If you don't, say so, right? You might be right. What's non-current assets? 96, they said. Which ones are current assets? Cash? Cash? What about short-term investments? Short? Okay, short-term investments, accounts receivable, and inventory. That's it, isn't it?
I got 94.
She got 94. Anybody else get 94? No. Try it again. Can't add, apparently. See, you stuck your head out there, right? Your neck out there, and I chopped it off. You know what? That's good, though. Isn't it more fun? Who cares if, you know, maybe she's right and the rest of you are wrong. I've had that happen in a meeting before. It's really fun. And we're valuing something, you know, when we do whack captain, we're valuing companies. And one student will have a really good answer, and the others will all be grouped together with a wrong answer. You know, there's a lot of right answers when you value companies that are within a reasonable range, and then there are a multitude, millions of wrong answers, right? So I look at it. I know what my value was, you know, and so one kid will have it, and I'll just leave them hanging out there. You know, the whole class disagrees with it. And then I'll have them prove to the other ones that are wrong. It's really fun, right? You know. And I want him to say that they're proving they're wrong. I said, well, how'd you calculate it? What'd you do? And then we go through the process. And, yeah, I like that. That's kind of what I did, you know. And by the end, it's, yeah, I have an answer real close to yours. And the whole group figures out. This can happen in business meetings. I've done it before, right? Where, you know, I might be the right one or I might be one of the wrong ones. I've seen it a lot, okay? So stick to your guns. Have confidence. That's one of the things she talked about, wasn't it? Nobody was asking. You didn't ask any questions. You came to that meeting without a question. Here's what you do. I asked a question, I think, or maybe 10. By the time it was only 1 or 2 while the thing was going on, because I wanted other people to. But afterwards, I had tons of questions for her, right? And comments. Just based on what she said, but I didn't formulate any in advance. Here's advice for you guys. And she gave you this, right? Formulate your questions before you go. You're not just there to hang out, right? This is work. It's work to go to that, okay? So when you go, what do? You got your list of questions you want to have the answers to. What do you want to know? Man, look at all the stuff she's done. If you read the email, which you probably did, right? That listed everything she's done, her little short bio was on there, right? All kinds of stuff. What was it like to be CFO at Brown-Forman? What was that experience like? How did you get yourself in a position to be CFO at Brown-Forman? That'd be kind of cool to do that, you know, to get there. Maybe, you know. That could be a pain, but anyway, yeah, a lot of ways. Okay, 96? Did you get 96 this time?
What's that? Pretty thorough, though, with her. I feel like I...
Yeah, but you could ask some more. Yeah. Each one of the things she said led to a new question. The question I asked was, she only answered a little bit, right? I asked her about what causes startups to fail. What do you think is the biggest, you know, I asked her for specific examples of what caused them to fail. She said management. Egotistical, underprepared, unethical, those sorts of things. Anybody, oh, what was it? People who could not take, that was another question. People who couldn't take advice from somebody else. People are just too full of themselves, right? I come in here and I pretend like I know everything, because that makes you guys work a little harder, I think. It's his style, right? I pretend I'm arrogant. Was I pretty arrogant in that meeting, or was I just somebody there? No, I was just somebody there. Shoot, why would I be arrogant around those folks, right? Everybody there knew more than me, including him. I know that, right? But there are a lot of things you know I don't.
I thought it was, she started talking to me about that mind control, remote control car. Like,
Yeah,
I remember the video.
Yeah, that's right, you did talk, I remember, because she asked him, yeah. Anybody know about this stuff? And he knows a little bit. Jill knew a little bit, too. Yeah, she had to judge him. Yeah, mind control car, I don't know, whatever, yeah. Okay, anyway, what's the current non-current assets, you guys? 84?
284.
284. All right. What's 284 and 96? 380? 284 and 96. 380, right? Okay, what's current liabilities?
48.
What's non-current liabilities? What's that up to? That means the equity has to be what?
240.
Yes. What's contributed capital? Is retained earnings 60?
Yeah.
Hey, the problem worked. Could you have answered any of those questions easily? Yes.
Yeah.
Okay, if it's a multiple choice, even if you had it wrong with her, right? You can still get it right. You go back, double check it. So, you know what? Multiple choice are an advantage if you do this. If you cover up the answers before you work it, then it's an advantage to have multiple choice. If you don't, it's a disadvantage. Why? Because you'll look at the answers and you'll get sucked into one of them. On the CPA exam, all the answers are logical mistakes, right? Or they're a number that you reach before you get to the answer. You with me on that? That's how you make multiple choice problems hard. So when I write multiple choice, I always do that. All of them, I think, are a logical error you might make, or it's on the way. Cover up the answers. Even if it's just terminology, cover it up and formulate your own answer, and then when you go look at it, if it's not there, you go back and reread the question. If it's there, you're done, right? You don't get sucked in. Don't read the answers and pick a good answer and then go read the question and circle the answer. You can talk yourself into the wrong answer. And you guys already use that strategy for multiple choice, I hope? I used to actually literally cover them up. Now I just never look at them, okay? After a while, I just don't bother reading what for. I don't care what they think the answers are. I care what I think the answer is. Okay, so anyway, I guess the answers for 15 were C, and for 16 were D, because that's what we got here. Okay. Which of the following journal entries is prepared when a customer pays cash subsequent delivery of goods or services? Subsequent to. What are we getting, guys? Cash. So I made 3 of the debit cash, huh? Okay, so yeah. Cash is coming in, so debit. So by the way, you can cross off C. I would do that if I were you, if I didn't know the answer to this thing. I'd cross it off, and then at least I got 1 chance in 3 instead of 1 chance in 4. Don't just guess. Right? Get rid of the ridiculous ones. That one's impossible. Okay, so what happened? They sold the stuff. What was the journal entry when they sold it? Can you tell me what that was? They get paid later, after the sale. So what did they do when they sold it? Credit sales and debit what, guys? Accounts receivable. So that you know happened. So now what happens when they get paid? You debit cash, don't you? And what do you credit? Accounts receivable, just like that. Okay? What if they got paid in advance? What would the journal entry have been? That's after, right? What if they got paid in advance? What would it be? Debit? Cash, because they got paid. Credit what? Unearned revenue. Okay? And then what would happen when they deliver the goods or services? Debit the unearned revenue. This can be easy, isn't it? And credit what? Sales or whatever it is, right? Sales or service revenue. Yeah. You're not going to miss any of these, are you? Yes, ma'am.
Yeah, I have a quick question. So is like the second journal entry, is that the same as like an adjusting?
Well, actually, it could be an adjusting entry if it's a service that you earned over time, or it could be just that you, at the point that you deliver the goods, you record it. So it could be either way.
Oh,
The adjusting entry would be at the end of the period to do your financial statements, right? So if it's, let's say it's unearned insurance revenue, and then, you know, you got a whole bunch of different policies at the end of each month, you might make an adjusting journal entry that looks like that. So yeah, it could be. Or it could be you're delivering product, and every time you deliver product, you do it. Okay? Either way, that's a great question. By the way, which one of these is an accrual, or which one's a deferral? I don't accrue or defer cash, right? I accrue or defer what? Revenues and expense. Which one's accrued revenue? The first one's an accrual. That's an accrual, guys. I'm accruing the revenue. Those of you going into 211, this is going to be really important. Okay, really important. We're going to talk about it this way. Okay, what's this? I deferred the revenue. I'm not accruing or deferring cash. I'm accruing or deferring revenue, right? So accrued revenue, right? And this one is deferred revenue. What's the other possibility with revenue? You know, you can get paid later, you can get paid in advance, or you can get paid now. What would that be? Debit, cash, and credit? Sales. Got it. Okay? Let's do the expense side while we're at it. Can you do it? Write that down. For the expenses, let's say it's rent expense. Okay? Let's do rent expense. Pay it in advance, and then record the expense after you used it up. So two entries, right? And then pay it in the same period, which would be the cash deal, right? And then pay it later. Can you do those three? Really quick. It's $1,000 of insurance. Or I'm sorry, of rent. Okay? $1,000 of rent. For a real small warehouse. Yes. Okay. For a small business. That was funny. She said, I'm really not very good with companies, you know, between 200 million and a billion. Those little companies are talking about it. We have different visions. She likes normal sized businesses, you know, up in the billions. Okay. She said Oshkosh was a really tiny company. Her first job as a CFO, so she's still about it. I've seen Oshkosh close. I don't know if they even exist as a separate company. They might be. You got them all done? Yeah. There's cash now, there's cash later, and there's cash in advance. And we're doing the expense side. One's a deferral, one's an accrual, one's cash, right? You guys got them? Not a yes? Okay, give me the three of them. Cash now. What would it be? Debit what?
Rent expense.
Rent expense. That's how you increase expenses, of course. Credit what? Are we done? Yes. Okay. We recognize the expense, and we realize the cash going out. Right? Record that too. Okay. Let's do cash later. What would that be? I'm going to pay it later. Debit. When I use it, I debit rent expense, right? In 1 month, in the first month, right? And credit. Rent payable, probably. Some companies go to accounts payable, some we go to rent payable. If you're doing it for me, you do rent payable for the friend, and it's an accrual. Okay. We usually use accounts payable for inventory purchases. Debit inventory, credit accounts payable. But some companies we go accounts payable. And then what? Well, they get paid. We pay them, I'm sorry. What do we pay them with? Cash?
Cash and debit rent payable.
Yeah. Got it. So what is this, an accrual or deferral? I think that's an accrual of expense, don't you? We got an accrual here. I recorded the expense before I paid for it, didn't I? Okay, that's an accrual, and then I paid it, right? That's it, 2 different periods. And you can see that rent payable cancels, right, between the 2 months. Everybody got it? All that's left is rent expense and cash, debit, rent expense, credit cash, debit, rent expense, credit cash, because that's what happened, just in 2 different periods, huh? So we need to do the accrual, because I want to get the expense recorded in the period I used it up. And I want to record the cash going out in the period I paid the cash up. And I want to record the liability because I have the liability in the first month. And then at the, in the next month, I don't have a liability anymore, so I get rid of it. That's all I'm doing. Just reflecting economic reality to the extent possible, huh? Okay? What's this one going to be? Cash in advance. So I'm paying for it in advance. What do I pay it with? Cash, credit it, right? And what do I debit? Prepaid rent. And what kind of, you could call it prepaid rent expense, by the way, that's fine, because that's what it is. What kind of an account is it that I put prepaid on it? It's an asset. You got it. And what's that, a deferral or an accrual? I think I deferred the expense until later, don't you? Put it off until later. That's a deferral, isn't it? Okay, why did I do it? Because I don't have the cash anymore. I take it off my balance sheet. I'm going to tell the truth. I have prepaid instead. I put it on my balance sheet. I just traded assets. Debit an asset, credit an asset. Then what happens the next time? It becomes rent expense. Rent expense. Because I what? Used it. When I used it, I go to expense, right? Just like on the revenue, when I earned it, I go to revenue. Huh? That's how I decide when to do it. Okay? And credit what? Yeah, I'm not going to pay it again. I used up the prepaid. So I don't have that asset anymore. I used up the asset. It became an expense. Right? You can incur expenses by incurring liabilities, debit an expense, credit a liability, or you can give them an asset, right? Give them cash, or right, give them a prepaid. True? Give them inventory. It becomes cost of goods sold. Use up your land. You don't use up your land. Use up your building and equipment. It becomes depreciation expense, right? You're giving up an asset. It becomes an expense. Got it? On the revenue side, what could happen? You could get paid cash, right? They could pay you later. You could have an account receivable, a different asset that becomes cash later, of course, when they pay you, right? They can give you land. You can do it land and credit sales if you want, right? You sold them product and they gave you land. It can be anything, right? Equipment. You can trade. People trade stuff. Right? Okay? Or they can pay you in advance and you have unearned revenue, right? Debit, cash, credit, unearned revenue. And then you get rid of that liability by delivering goods or services. Everybody got it? This is just business, huh? This class should be called business. Duh, right? It's just business. If you understand how to account for something, you know what you did. If you can't account for it, you probably don't know what you did. Oh. So how are you possibly going to decide what you're going to do next if you don't know what you did? It's not going to happen, right? Not going to get there. Okay. So that was one thing she had to say too. This whole thing of, was it coaching? Except coaching it was, or something like that. Coachable. You know, these people with big egos that won't let somebody else know more than they do. You know, when I worked as an auditor, one of the things I'd always look for, I'd like to see management that loved to hire owners, right, major shareholders, president of the company. They wanted to hire people that knew a whole bunch of stuff they didn't know. And that's my philosophy. I want people around me who know stuff I don't know. Why? They're valuable. What if they know exactly what I know? Man, we're not going to grow much. You guys, I couldn't sell products if my life depended on it. If I was running a company, would I need somebody that's really good at marketing? And I'm an obnoxious person. Would I need somebody in human resources that was a nice person? You know, maybe, right? You know, so somebody who is really defensive, won't answer any questions, when I was working as an auditor, they won't answer any questions, they don't have time for you, they're too important, right? Their pay scale's too high, you know, they have just too big an ego to learn from somebody else, or listen to somebody else, or talk to somebody else. They're dangerous. Be coachable. All of your life, keep learning and learning and learning, and if you get somebody around you that knows more than you do about something, you know what they'll do for you? They'll explain it to you. People love to tell other people what they know. It's really cool. It's great. People who are not even paying will do it. You get advice all the time. I give free business advice to businesses that I go to. They don't even know I'm giving it to them. And some of them are like, what are you doing? So that's, yeah, whatever, And other ones like, oh, wow, really? They sit down and talk to you. It's ridiculous. I've been in restaurants, right? And had the owner come over and, talk to me a little bit, do you like this? Talking about stuff. Conversation just starts going. They'll sit down at the table and talk to me for a while. They're a few $100s an hour. Are you kidding me? They're not stupid. Right? Why wouldn't they take it? Right? They can not do what I advise. It's okay. Geez, did you think about trying this? Did you think about trying that? When are your busy times? When are your slack times? So be thinking, you guys. Anyway, I guess you want to leave, huh? Let's do one more. So what was the answer anyway for 57? Or 17? D, right? Option D. McNeil Company owed its employees for services performed and recorded as a liability. What is this thing? For the wages owed to the employees. What did they do? Debit wage expense, salary expense, credit what? Salaries payable, right? Okay, what happens when they pay it? So it's just this. Here we go. They debited salary expense, wage expense, whatever it is, for their employees. Salaries are if they're getting the same amount every period, right, every month. Wages are if they get paid by the hour. That's all that is. And then we have salaries payable or wages payable, right? So they did that. And now what they want to know is what's the impact of paying that, right? Isn't that what it says? When you credit cash and debit salaries payable, of course. What does that do? Assets equal liabilities plus equity. Revenues less expenses. You don't have to write all this down. That's the way you think about it, right? What happens with this journal entry? Liabilities go down, assets go down. You tell me what happened to equity. Nothing. Revenues, nothing. Expense, nothing. Net income, nothing. Operating expenses are increased. No, they're not. Retained earnings decreases. No, it doesn't. Operating income does not change. That's true. Right? Total assets remain the same. No, they went down. Couldn't miss it, could we? Which of the following accounts normally has a credit balance? What accounts have a credit balance? Liabilities. Oh, contra assets. Liabilities, equity, revenue, and contra expenses, right? So which one of these works? The first one has prepaid as an asset, no. Second one has expenses, no. Third one has inventory, no. Fourth one, liability, equity, revenue. That's the answer, D. No quandary whatsoever, right guys? You just didn't nail these things. See you guys.